Okay, peeps, welcome back. So today we're going to be going over buy, sells, and dividends for the week of August 11th through the 17th. With that being said, let's get it. Okay, so first thing I want to do is give a shout out here to 65 Sock. I'm not sure if that's how you say that, SOHC. Sorry if I mispronounced that. He or she, I'm not sure which it is, said, I prefer trading NVDL for cash secured puts and covered calls. Premiums are generally 2x the NVIDIA premiums. This is something I wanted to point out to the community. If you guys are looking to sell calls and puts, we've been thinking about eventually getting into NVIDIA. But as you guys know, NVIDIA is expensive. It's like $130 a share. So you need $13,000 to buy 100 shares to be able to do calls and puts. So shout out to you for posting this. Really appreciate it. I'm sure everybody else does. But if I actually go over here and show you guys this firsthand, I'm actually going to show you NVIDIA versus NVDL. And then we'll, once we're done with this, then we'll actually get into the content here. So NVDA, we'll just go with the sell call here, and this is the 6-day time frame. So once again, in order to do calls or puts, you basically have to have 100 shares times whatever the share price is. So with something like NVIDIA, I'd be doing a relatively safe delta with like around a 30. As you guys can see here, it'd be $150 a week. So 151 times 100 shares is what the buyer would be paying you on the flip side of the trade for the right to buy these shares at this current strike price. So it's about $600 a month. But the thing I want to point out here is that in order to get that, you would basically have to pay $129 a share times 100 shares. But if I go over to NVDL, which you guys can see this is an ETF, so it's not the same thing as NVIDIA, but it is too long. Or 2x long. I'm assuming this is on leverage. Roughly about half the price. So once again, if I go into the options chain here, you guys can see on the sell call, again, it's the same time frame, 6 days. I'll just scroll up here a little bit. I think it was the 145. Yeah. So basically you guys can see it's roughly about half the price. Okay. Not exactly half the price, but much cheaper than actual NVIDIA shares. 31 delta, $1.45 times 100 shares. So $145 a week, which then comes out to about $600 a month. So I just wanted to point that out to y'all so you guys can see that. Okay. So let's get into the actual content here. All right, so in terms of what we did for buys this week, we bought YMAX, YMAG. As you guys know, YMAX and YMAG, they had their dividends this week, so we wanted to get ahead of that while we still had time to do so, and we did. And then once we were done with that, we went ahead and bought some TSLP and AIPI. The reason why we didn't buy FEPI and we bought AIPI instead is not because of the dividend payment. I mean, it is actually in part, it's because of the dividend payment. I'm not going to lie, because I mean, it is actually quite a bit more than FEPI. But the thing is, we want to get both of these up to at least 100 shares. And then maybe, on some dips in the future, we buy this thing specifically and just kind of keep it there. Basically, keep it at the 100 shares. If it dips, we buy more or whatever. Or maybe we just keep doing the dividend capture strategy. But it doesn't really make sense to have 100 in FEPI and not have 100 in AIPI. So we went ahead and bought some of that. We also bought Very and NVIDIA, the actual NVIDIA stock, for a swing trade, as you guys know. So I'll go over that in a minute. And the last position that we bought was TMF. As you guys know, TMF is a bond fund that essentially inverses the Fed. Okay, so TMF, essentially what it is basically when if you were to buy TMF, the best situation to buy TMF in is when the Fed is basically about done. Pretty much they're raising rates or they're about done raising rates. You can position on the way up to the top of them raising rates. And then you theoretically would want to be positioned by the time they're getting basically about ready to do their first cut, which again, the markets expect 100% chance of a cut next month. Okay. So when the Fed cuts, that's when the price of TMF goes up, because as you guys know, bond yields and bond prices have an inverse correlation. Okay. So when the Fed raises rates, the bond price goes down, the yield goes up. And when they cut rates, the bond yield goes down and the price goes up, which explains why this TMF would go up in price, right? So those are the positions we bought. We bought some Filecoin, and then We did sell BTBT. I'll show you guys that, although we're not really putting that on the books per se, because the mix between the options premiums that we got paid and the profit we took on the position was roughly about the same amount of money that it cost to sell the shares, or not. I'm sorry, not to sell the shares. I mean to buy the contract back that we had. That was basically a leap to buy it back at a slightly cheaper price after the market crash. I'm sure you guys know when you have a sell call and the price of the underlying stock goes down, it becomes cheaper to buy the contract back for a partial profit. So that's essentially what we did. So, anyways, let's get into it. So, whoops. Okay, well, it kicked me out of here, but basically, we got. I'll have to show you guys this in another video, but we did get 45 cents from, I believe it was HRZN. I think it was 22 cents and 23 cents, so 45 cents from M1. As you guys know, we're not really doing much of anything with that right now. But anyways, so going over here to Fidelity, you guys can see we still have the same positions, same amount of cash with the Grayscale Trust. So we do still have our positions. We may still add to them before the bull run kicks off. We're currently trying to what's the word I'm trying to use here? We're trying to create extra capital to basically be able to buy these more of these before the actual bull market takes place, which again, in my opinion, is probably the slow markup phase of that's probably going to begin next month when the Fed cuts rates. But as it is currently, it's essentially the same as it was before. So I'm going to go ahead. First, I'll pop over to Webull here. As you guys can see, we still have OARC. We're basically just waiting for the position to get back to break even at some point so we can get out for break even and then move the money over to Robinhood. And you guys can see that we didn't get any dividends as of this week right now from Webull. So now I'm going to go ahead and go into the positions that paid us the dividends. So let's see here. We'll start with YMAX. YMAX, unfortunately, it has taken a dip, and that, of course, you had the dividend payout. So because the crazy flash crash thing hasn't fully recovered yet. But you can see $161.06 here. And then I can actually just show you guys this since we're already on this tab anyways. Let's see here. Just scroll down a little bit. So basically 1.39 shares here on August 12th, roughly about 1.39 August 13th, 1.38 August 13th, another 1.38 August 13th, and then 2.76 shares on August 14th. And keep in mind, these are all at discounted prices. So when the price goes back up, the dividend theoretically should go back up. And then there's some upside potential here. So that would be YMAX. Now I'll go all the way down to YMAG. We do still have AMC, just so you all know. We haven't added any more to it yet, but we may do that now that this thing has actually had a monthly golden cross, which is pretty rare. It's over the course of the last 5 years, I think it's popped up 3 times, if I'm not mistaken. So YMAG, you can see the average share price that we have here compared to the market price, 241 shares. So if I'm scrolling down here, you guys can see that we got paid roughly about $140 here. And again, that is for 1 month. So that's absolutely fantastic. And just scrolling up here so you guys can see the transactions. So we got 1.31 shares on the 12th, 1.29 on the 13th, 1.29 on the 13th again, and again on the 13th, 1.29, 2.59 on the 14th. And then we got the actual dividend payment. So you can see the BTBT contract is not here anymore for options. So that basically should take care of that. Actually, before we go too much further, I will show you guys so you can see the actual transaction there. I mean, we were planning on holding this thing long term, just to let it expire, but then the kind of weird black swan event happened, so we decided to just get out for cheaper. So I'm trying to remember here. Was this? Yeah, okay. So we bought it. We basically bought this thing back for $1.75 a contract. I don't actually know what we received in premiums here. I'm pretty sure it was more than what we paid to buy the contract back, though. I'm trying to find it, but for some reason I can't seem to find it. I don't know why. Excuse me. Okay, I'm trying to see if I can find this for y'all in here, but I just am not seeing it right now. So maybe it was this one, $1.33. Okay, well, I'm just gonna have to go with this one for right now. So basically, we got, it looks like $1.33 in premium plus about $1.30 in premium. So we'll just call it $1.31 in premium. And then because of the wicked crazy flash crash we had, we ended up paying a lot less to buy this back. So basically $1.75 per contract. So we paid about, I think, 40 cents per contract. If I were to do the math on that, it's like $40 times, what is it, 7 contracts. So we paid basically $280 to get this contract back. But that's not entirely true, though, because we did sell for profit. So I don't remember what the average price was that we paid for all the shares. I do remember it's lower than what we sold it for. So pretty much the difference there should have more or less covered the loss. I mean, we should have been pretty close to break even. Of course, I didn't prepare that for this video, so I'll have to go back and show you guys later. So let's now go to TSLP. So TSLP here, you guys can see that we recently just bought some. So we bought 4 shares on the 16th and another 12 on the 12th. Basically what we did is we took all of the dividends we got for the week and threw that into TSLP and AIPI. Okay, so let's keep on scrolling down here. We'll go next to AIPI. So we lowered our average cost a little bit, although it is still down from the flash crash, but not down nearly as much. It has recovered quite nicely. As you guys can see here at the bottom, this thing was at almost $45. Now it's at basically $5 a share more than what it used to be. So there is the strength aspect of this ETF. This thing does make nice recoveries like QDTE and XDTE. So you guys can see we bought 1.6 shares here, then 0.2 shares, and then 7.55 shares. And of course, we're expecting the dividend to pay out really nicely. We're just kind of hoping that the price would recover as nicely as FEPI does. So let's see where the next one is. I think the next one here is QDTE. Yeah, there we go, right there. Okay, so QDTE. So this one also recovered. Actually, if I show you guys this here, you guys can see this, not quite a V-shaped recovery, but it's not quite at the price that it was before the flash crash, but you can see it's still up almost $3 a share. So it's an impressive recovery, to say the least. And we did get $47.65 just for this week, because this is a weekly paying dividend ETF from QDTE. So that was definitely nice. And then XDTE, we still got to get this up to at least 100 shares. So we didn't add anything to this at all. We just kind of rode it through the dip and then the pop. You can see we're only down as of right now about 2%. So the S&P did not fall nearly as much as the NASDAQ. So this thing didn't have to recover as much, which is nice in order to get back up to break even. So $29.58 from this one. That total comes out to $377.57. And then, of course, we have the 45 cents here from the M1 Finance account. Sorry that it kicked me out. I'll have to show you guys that in the subsequent video. So we got $36 from Robinhood. And this was from owning the actual stock, Robinhood, and doing the covered call. So that entry date was 8/13/2024. And then the exit date is going to be the 13th of September. So it's $36 times one contract. With a strike price of $21.50. So you guys can see it right there over here. And it's one contract with a delta of 0.23. Our average cost on that is $21.16. Of course, we don't want to sell the shares at anything less than a profit. So there's that. Um, Now, the next thing on the list here is going to be TMF. Again, we don't really have a lot of money in TMF right now, but as we get closer to the Fed cutting rates, we're going to start piling more money into this. And I can tell y'all right now, we are not the only people looking to buy into this thing. There's probably people that have been buying into this thing for months on end, anticipating a Fed rate cut. Because again, this thing, we've already showed you the charts on X and on YouTube. This thing likely is going to go much higher when the Fed cuts rates. Okay. And it's also a 3x. It's basically a 3x bull ETF, as you guys can see here, or bond fund, whatever you want to call it. So, yeah, we didn't really add much. We have 0.94 shares, so we will be adding more in the coming days and weeks. So you can see here 0.17 shares on the 15th, 0.3, roughly about 0.35 on the 16th. Okay, so let's go over to the swing trades that we did this week. And you guys are probably wondering, like, well, why don't you buy more crypto? Well, guys, that's because crypto is not moving. We are buying crypto. We're just not buying it in mass. We want to see something trigger to where it starts flying off the handle to the upside. Then we're going to load the boat. Okay. We want to see that squeeze signal to really be basically ensuring that we're buying a squeeze and not some kind of top. I'm not saying it's going to top. I don't think it is. I think we're just in accumulation. We'll get that into that in the next video. But one thing that we've learned about Wall Street is they generally like to go where the money is. Okay. So if something's not making money at that particular time, then we just want to go to something else, at least for the time being, that is making money while we simultaneously accumulate crypto. That's kind of just how we're seeing it. Because again, the compounding effect is pretty powerful when it comes to growing accounts. So you guys can see we bought 25.43 shares here on August 14th, got out same amount of shares on August 16th. Basically sold for roughly about looks like maybe 550 somewhere in that per share more. So a nice $163.43 profit. Again, we probably could have held this all the way up to the previous all-time highs at 140, but it was Friday. We just said screw it. We're just going to get out, get prepared for the next week, maybe take a new swing trade, which we already talked about. So next one here is Veritone. This is kind of a much smaller cap AI play. So $3.84 currently from the price that we bought in. I think this thing is up nearly 80 cents a share. So, and if I'm being completely honest, y'all, when I looked at the charts, and we did show you this on X, I don't think it's actually done running. I'm not sure how high it's going to go. It could go to 450 or to that 775 or whatever it was, but I think this thing probably has got some more upside to go. So we bought 647.38 shares, as you guys can see here on the 14th, got out same day. During that same day, it went up, for us at least, an additional 32 cents a share. So that's huge. And we managed to pocket $210.09. Again, this is just a classic swing trade. It's nothing fancy with buying options or doing, put spreads or call spreads or any of that stuff. So just a classic technical pattern, technical chart swing trade, nothing more. Okay, so now we're going to go to the crypto portfolio. I'll show you guys the portfolio in a minute. I just want to show you the transactions here first on the actual Filecoin. So we've basically just been doing nothing but buying Filecoin. That's pretty much what we've been doing. So 11 to the 17th, that's the range we're looking for here. So you guys can see we bought a little on the 12th, bought a little on the 11th, bought a little bit on the 13th, bought a little bit on the 13th, and then the 14th and the 15th. And we're just consistently slowly accumulating this. The 16th, 17th, it's pretty much the same thing we did during the bear market in 2022. So this is not out of the ordinary for us. As you guys can see, we'll talk about this in a later video, but Bitcoin is mostly just chopping sideways. We see this as accumulation. I mean, it hasn't had a real breakdown, and I don't think it's going to. So we're just kind of accumulating while this thing's bobbing around. And that's also how we kind of see the Grayscale Trust too. They're in accumulation mode. As to whether people accumulate it or not, well, that's up to them. So in terms of profits, we made $370.59. And in terms of the total that we made on the week, $784.61. Still a pretty good week, if I'm being completely honest. I mean, it's not bad, There's a lot of people out there that collect $300, $400, $500 a month in dividends that are very happy with what they get, and we're pulling in between various sources of income, not even really heavy on the options premiums as of right now, still almost $800 in a single week, and that's on a relatively small week. So can't complain about that. Anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.